Hey, welcome back to Two Stupid Guys Try Stocks. I'm Dylan.
And I'm Vinny. And today we're going to take a look at Nvidia, however you say it. It's a fantastic company. And I want to look at the numbers and kind of figure out where I would buy it since we've had a little bit of a hiccup in their performance of late. So we're going to take a look at the chart and then we'll get into a little bit more nitty gritty about where they are valuation wise compared to other companies in similar space, if you will.
All right. To be fair, if this is going to be a Vinny price of what you buy them at, you got to add a premium to, stock market sentiment. So, sentiment. Um, now, so the problem with this chart and resistance and support lines, it doesn't work as well as other stocks because they're constantly going up. So it's not there's not like a lot of tested levels. So these are all they're kind of weak, to be honest. This is the 200 moving average. We hovered here. We're still around it. We are losing volume a little bit, but it's not crazy. It's still about what it usually is. 130. It's a decent resistance line. You can see rejected multiple times here, 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 and here, and here. So we're at it right now. This is probably the strongest line. All these other ones have been tested like twice because it goes up so fast. So
Yeah.
it's and as you zoom out, these just become useless because it just
Mhm.
only goes up and to the right. So yeah,
Yeah. The all-time chart on Google is even more startling. Up 324,000%.
yeah. I mean, it's crazy. Um,
Yeah.
but yeah, I'll give you my price. Where I want to buy after I see yours.
Okay. Fair enough. This is what I was saying by they've had a little bit of a hiccup of late, right? Like 6% down year to date. Okay. And it's a phenomenal company. Right. So, what is driving this recent little hiccup here, right? All of a sudden, we got the news that came out about DeepSeek and their kind of deep mind computer system and how they're able to train it for such a significantly decreased cost compared to other AI, algorithms or kind of artificial intelligence programs out there. This was a chart I found from just Statista showing basically what it had cost in the past to train some of these algorithms. And Zuckerberg has talked about this before. I remember in his Joe Rogan interview talking about how the amount of compute required to train each generation was going up in a kind of an exponential fashion.
Right.
So they were getting more and more demand for the actual GPUs that Nvidia makes. All right. So this is little blurbs from the CNBC article talking about this, how it had cost 5.5 million to train the article. Now, apparently in their white paper, they basically said that this would be if you actually just rented the amount of compute they had
Hmm.
for training the algorithm rather than actually buying it. All right. I want to say right here. Um, this news shaved $800 billion market cap off of multiple US major tech companies. And the funny part too is that the estimates are that they actually didn't rent this, that they actually own these Nvidia products, and they had spent over a half a trillion dollar, I mean, a half $1 billion, sorry, on acquiring them. And, it's much more investment heavy than it would make them seem by their $5.5 million price tag for training.
Got
Right.
it. Makes sense.
So garbage number, right? In fact, it's so garbage that since this has come out, we've had multiple other major tech US companies kind of talk about their capex projects for next year. Yeah. So the worry was, right, are we going to need significantly less compute power going forward to training these AI models? And therefore, NVIDIA's days are numbered, right? No one's going to be spending a lot of money on their products over the next several years because they're just not going to need it. It's actually cheaper to run AI than we thought, right? That's what the worry was, right? But all of a sudden, we got here Zuckerberg saying, I'm spending $65 billion this year on my AI infrastructure. We have Alphabet came out and said they're spending $75 billion this year.
Right.
All right.
And smart guys. So
Yeah.
I mean, they kind of know what they're doing a little bit.
Or those of you that like to see it visually, this is the big tech companies' capex projected for next year.
Oh my god. Jeez.
Yeah. Yeah. So the amount of money that they're spending is not going down. We didn't realize that AI is so cheap and that we don't actually have to spend anything more than a few $1 million to create these AI, kind of systems. They're spending tens of billions of dollars per year, and Nvidia is the actually kind of the benefactor of the vast majority of this, right?
Vast majority. It's not even close.
Yeah.
Yeah.
So let's look at some Nvidia related stuff, right? Stock has gone parabolic. Look at this revenue graph up and to the right. Is that the sexiest revenue graph you've ever seen?
I mean, yeah, this is a company I'd very much like to own. But
Same.
every time I'm like, ugh, it's just worth so much I can't buy. I'm just gonna wait. And then it goes up more and then it's more. It's like, come on, damn it.
Wait until you see actually where it is priced relative to some of its other big tech peers. That's really what I'm trying to get at here. Okay.
Okay.
Net income, same direction, up and to the right.
Sexy.
Just phenomenal growth, right? All right. Shares outstanding, flattish. Now, depending on the valuation, this may or may not be a good thing for long-term shareholders. Right? I like to see my shares outstanding decreasing, but and particularly when we have a company like Nvidia that does a lot of stock-based comp. But I wanted to see kind of whether or not it's a good idea based upon the valuations of Nvidia, right? Oh, sorry.
For the record,
Um,
I don't think they should be buying back shares right now. It's
maybe.
they need to stay at ahead of the curve, and to do that, you got to spend more money. At this rate, it's not like they're going to be hurting, but
Yeah,
I think the risk right now is not worth it because you have
yeah.
other companies that are also trying everything they can possibly do to get market share.
Yeah. I don't think there's any competition basically. This graph is
Ooh.
a great one to mention the words market share.
Okay.
This is their margin, right? They have gross operating and net margin. All of those charts are going up and to the right,
Yeah.
meaning that Nvidia is able to charge more and more for their products and have more and more of it head towards their balance, kind of bottom line of their balance sheet, and income statement, because well, I mean income statement really is the correct answer there. Um, because their products are just unparalleled, right? As much as I want to believe in like the underdog, like Intel or AMD, if you saw the most recent earnings report from AMD, they kind of whiffed a little bit and they got punished for that. The data center business is much more Nvidia's than anyone else, and it continuing to be so because where you have to optimize for infrastructure, right? This is what I'm reading. I don't. This is not a realm I work in, but this is what I'm trying to understand here. Is you have to optimize for a certain architecture. So therefore, Nvidia is kind of getting to the point where they're going to be the de facto choice, and
Okay.
these margins are a result of that.
Got it. I mean, yeah, it's every graph here is just up and to the right. It's insane.
All right, so let's look at some valuation kind of questions here. This is just a chart of PE over time from Nvidia, all right? So PE right now we're hovering in the 50s. That's where they've been for the better part of all this time since 2020. All right, so the last 5 years, 4 years, they've been for the most part 50 or higher,
Okay.
which is pretty crazy. But we're gonna see if it actually matters. Right? So I'm a free cash flow kind of guy. I want to
Yes, you
see
are.
what is the price to free cash flow ratio. You've heard me talking about free cash flow yield, that sort of thing. That's actually the valuation metric I'm going to use here. So price to free cash flow, same thing. They've actually been hovering. It was north of
Okay.
50, and
All
then it's
right.
kind of slowly trended down as the company become more and more profitable. So on a
It's
price to free
actually
cash flow basis,
it's actually better than I would have thought it was, to be honest. Yeah.
wait, just wait. This is going to make you want to buy some Nvidia, I think, at this point right now. Return on equity. So this is how good is the business at earning a return for its shareholders. And look at this. It's like, over 100 here. That's phenomenal. That
Yeah,
is a
it's
business that is
fantastic.
doing great for their shareholders, right? All right. All right. And are they at the risk of going bankrupt? So, no.
No,
All right.
not
And
worried
they
about it.
really never happen.
No.
So, the nice thing about the way that they manufacture their product, where they're more of a design house, is that they're not infrastructure heavy on their own kind of internal
Right.
operation. Therefore, they don't have to take a ton of leverage to run the business like an Intel does, or Taiwan Semi would on their basis.
Okay.
So, current ratio, positive number, fantastic. Right. Finally, we're going to look at some free cash flow yields amongst some of these companies. Right? So their free cash flow yield, 1.78%, 2%. You've heard me talk about it before
Mm-hmm.
compared to like other companies. Obviously Alibaba is one of our big investments. It's like 15%. So not in the realm of Alibaba, but where are the other major tech companies in terms of the free cash flow yield at a particular point in time? All right, here's your answer.
Okay.
All
So I
right.
will say, I think everyone agrees the market's fairly inflated in terms of tech right now.
Yeah.
And we did this video probably 3 or 4 months ago where we were looking at actually Meta in particular at that time because it was above 5% when we did that video, but it has gone up substantially in stock price.
Yeah.
So, I mean, they're all pretty close. I mean,
Yeah.
they're, 1.4
Yeah.
off
Yeah.
from Google. So,
And mind you, all of these are still growing, and they're growing relatively well. They're having positive growth rates in the 20+% range for some of them, which is a really solid number. But they're not doing the absolute parabolic rise that Nvidia has, right? So their $3 trillion valuation looks less absurd than it would on the face value here. Okay,
there it
so
is.
there
There
it
it
goes.
is.
So this is what they made in free cash flow per year, or 12 month free cash flow. The market cap, in order to adjust for that to get that 3% basically free cash flow yield, is a share price of around $78 a share. Not
Okay.
as ridiculous as I would have thought. Now, is this like the absolute like end all be all? No, but I think if you see, not that's gonna probably happen, but if you see Nvidia approach anywhere in the high 70s, yeah, Dylan's immediately going to the chart to see how well this corresponds to
Well,
a support level.
this is
Um,
actually 76.
yeah, okay.
Yeah.
I mean, one can dream, one can hope, right?
Do you
So
think
if,
that's
if
going
you
to
see
happen?
it approach that, I don't know, but honestly, it's so
I don't
the
think so.
price is not or valuation is not as out of touch as I would have thought. You know?
If I have learned anything from the stock market over the last couple of years, it's that it more matters what people think it's valued at than what it's fundamentally valued at.
Hmm.
I don't as much. I would love for this to happen for 70. That is gorgeous. I would sell probably all of my AMD, take a loss, and put it all in Nvidia. I would not have a problem
Yeah.
doing that. I don't think we're going to see this number unless there's a pretty unprecedented crash that happens.
Mm.
Like if there's a month where unemployment goes from like 4 to 6, maybe.
Yeah.
I think this is more realistic. This $100 range. Would you buy right there?
So this is
'Cause-
funny. This makes me want to buy one share just so that it's on my radar a little bit more often. Because like I
yeah.
said, I thought it was completely disconnected from valuations. Like, obviously there's many different ways to look at things, but
Well,
the fact that they're
I
earning
mean, it's almost double.
slightly, yeah, yeah. I mean, that's still not far off from where I would want to own it, though. That think about it from that standpoint.
I think. Okay, so doing your discounted free cash flow, you got $77. Are you going to add anything to market sentiment? Because it's just like Apple, right? Where when market starts tanking or going down, Apple usually does quite well because people view it as a safe haven, as all right, this company's
Yeah,
not going anywhere. Nvidia's stepped into that ring.
I don't know if it has yet in my
Okay.
mind. Actually, it's. I'm really optimistic by seeing this, but I don't know if I would quite cross that line because mind you, the risk-free rate is still like 5%. You can earn on 10-year treasuries, right? Or 4.5% at least.
Yeah.
So this is still paying a premium price, but I think Nvidia can justify that premium price a lot better than some of the other major tech companies can.
For me, if it hit 100, I'm going to buy a lot. If it hits down to 75, I'm just going to buy more. I have learned my lesson on missing Meta by $2 at 86 and
Yeah,
88 or whatever it was. I don't
absolutely.
know if we'll get this is a big drop. I think that there's a lot of inflation in tech. I just think that's a lot of ground to cover. I don't know. That's a lot.
Yeah, no, I agree, right? Like the idea here isn't a high likelihood of being able to
No,
buy it.
I
The likelihood
yeah.
it's whether or not it'd be a safe, significantly profitable trade if you did buy it at that price. And I think right now, based on the trailing 12-month free cash flow yield, that's closer to that high $70 range for me.
Yeah, I agree. I think honestly, this week's gonna be important because we're at this resistance, which I mean, this is probably the strongest support or resistance line on the chart. Just because once again, there's just not a lot of history being here. I can't go back 5 years and look at something after a drop. It's just the price is so outrageous now.
Yeah.
So we'll have to see what happens here, but I'm hoping it dips back below this 200, and then usually people get scared and oversell. So I would pick up a decent amount around 100.
All right. Let's
All
see,
right, guys.
man. I hope we get the chance to add it to our portfolios. I'll say that.
Me too. All right, guys. Let us know what your price is.
Catch you in the next one.